Hi guys, I'm Harry and welcome to my finance channel. In this video I'm going to go through Tesla's Q4 and full year shareholder pack for 2020, interpreting the results and providing commentary to hopefully help you with your understanding of the company. Arguably the most important information from the quarterly releases are the financial reports. I have transferred over the information into a spreadsheet to help understand this information better. Tesla had a record-setting quarter for vehicle deliveries, delivering 180,000 units, bringing the deliveries for the year to just shy of its target of 500,000. This drove a large increase in the automotive revenues to $9.3 billion, 46% more than what was achieved in the fourth quarter of 2019. If it wasn't for the factory shutdowns earlier in the year, the early quarters would have achieved far higher deliveries and the 500,000 target would have been smashed, probably by around 30,000. The average revenue per car sale decreased by $3,000 for the quarter, a very large decrease. This will be because of the shift in sales from Model S and Model X to the cheaper Model 3 and Model Y, and also multiple price cuts to the vehicles throughout the quarter. Tesla Energy significantly increased revenues for the quarter. Shareholders will be pleased to see this due to the energy revenues decreasing throughout the last couple of years. This quarter's increase can be attributed to increased efficiency of deployments. Services revenue increased $100 million in Q4. The services part of the business makes a loss, so the increase in activity here will hurt Tesla's gross margin. This brings the total revenue for the quarter to $10.7 billion, slightly more than what analysts on Wall Street predicted. Looking over to the profit, Tesla Energy actually made a loss of $35 million for the quarter, with its margin flipping from being around 4% to negative 4.7%. This is likely caused by the price cuts to products such as the Tesla Powerwall this quarter, but was unexpected and is concerning. The gross margin loss from services negatively increased the quarter as well, not doing Tesla's overall gross margin any favours. The automotive gross margin decreased slightly for the quarter and was a surprise, and I think people expected it to increase with the increased sale of the Model Y, which has a great margin. The margin of 20.7% excluding regulatory credits is still very high for the automotive industry, but personally I was hoping to see it in the mid-20s. Tesla finished the year with an operating margin of 6.3%, significantly better than any of its previous years, which is very positive. The earnings before interest, tax, depreciation and amortization was a record $1.85 billion for the quarter, bringing the year to $5.8 billion, which is 95% higher than in 2019. Tesla clearly thinks that this is a good measure of the business's success, as it is one of the measurements used in Elon Musk's $55 billion compensation package agreed in 2018. The non-GAAP earnings per share were 80 cents, and the GAAP earnings per share was brought down to 24 cents. This large drop is in part due to the large stock compensation that Elon Musk claimed during the quarter, worth $267 million. This EPS missed the Wall Street analyst target for the quarter of around $1, so I expect the stock price will likely pull back in the short term. However, I don't like to speculate on short-term price movements. For me, one of the most important measurements of a business is the free cash flow it produces. As you can see, the free cash flow for the year increased significantly by 160% to $2.8 billion. Despite the large increase in capex spending for the year, this is impressive. Tesla finished 2020 with a very strong cash position of $19.3 billion, significantly higher than the $6.2 billion Tesla finished 2019 with. This is due to two reasons: the $12.3 billion of capital raised through the financial markets and the $2.7 billion of free cash flow. As you can see here at the bottom of the page, Tesla has been rapidly adding to its Supercharger network. This is crucial as with the deliveries of vehicles significantly increasing, the demand for superchargers will exponentially increase too. It is worth noting that Tesla planned to build a factory in China specifically for building superchargers, with a planned output of 10,000 superchargers per year. This will allow Tesla to increase the dominant market position its charging network has. Here, Tesla announced that they had been upgrading the Fremont factory to launch the new Model S and Model X, something that shareholders have been anticipating for quite some time. While it will take a little while to ramp, the upgrade will see a great increase in the demand for the premium vehicles, meaning that the run rate of 100,000 per year will likely be utilized a lot more than we have seen in previous quarters. Under Shanghai, it is noted that the run rate for the Model 3 is at or above 250,000 units. As the production combined with the Model Y is 450,000, we can assume that the run rate for the Model Y is around 200,000. Altogether, it is not hard to imagine that Tesla will get very close to delivering 1 million vehicles for 2021, based on these current run rates. And this does not even include the expected deliveries to come from Berlin and Texas later in the year. Something which catches my eye on this page is the future product and development. There has been no official announcement yet as to what this may be. My guess would be that it will be the $25,000 car. However, it does seem a bit premature to add this unless an announcement is imminent. The highlights from the core technology page are the stats about the new Model S and Model S Plaid. The new Model S now has a range in excess of 400 miles, significantly higher than the highest non-Tesla EV with a measly 270 miles. The announcement that the Model S Plaid is the fastest accelerating production car ever made was unexpected. A sub 2 second 0 to 60 is ridiculous, something that I was not expecting to see until the Tesla Roadster was released. I cannot wait to watch the airport runway drag race videos that get made of the Model S Plaid absolutely destroying significantly more expensive combustion engine cars. Here we can see that Tesla Energy remains supply constrained. The business has seen significant growth in 2020 and is looking to repeat this growth at a similar pace again in 2021. A notable achievement during the year were the meaningful improvements made to the efficiency of Tesla roof deployments. Elon Musk has previously said that the energy business will one day become as large as the automotive business for Tesla. However, I think that Tesla is a long way from achieving this. The Outlook page is very useful to help us build our future forecast for the company. We can see that Tesla are predicting over a multi-year horizon a 50% annual growth in vehicle deliveries will be achieved, with a higher growth expected for 2021. Using this growth rate, Tesla will be delivering around 3.8 million vehicles in 2025. Further, extending the growth rate out to 2030 gives us 28 million vehicles delivered for the year. While I think 28 million is too high for 2030, as the annual growth will be much lower in the years prior, it is now possible to see that Tesla's own target of 20 million vehicles delivered by 2030 isn't as crazy as it first seemed. Based on this information, I expect many of the analysts to provide large price target increases to Tesla in the coming days and weeks, as their current models significantly underpredict vehicles delivered. In the later video, I will build my own discount cash flow model for Tesla to come up with my own price target. It is forecasted that operating margins will continue to grow, which is what we have already known for a while now. And they state that Giga Texas and Giga Berlin construction is going ahead as planned, with Model Y is expected to start deliveries later in 2021. Tesla semis are also expected to have delivery started in 2021. There is no mention of the Cybertruck here, so I worry that we won't be seeing any Cybertrucks delivered this year. When the first Cybertrucks are eventually delivered, it will be a great moment for all Tesla stakeholders. I have a feeling that the Cybertruck will become the iconic vehicle of the Tesla brand. Looking at the current after-hours trading, Tesla is down around 5%. Given the lower than expected margins and earnings presented in the financial statements, this is not surprising. I imagine the sudden drop that you can see happen as soon as the earnings were released were caused by algorithms selling off. I will not be surprised if the sell-off period does not last long, as the future expectations of Tesla remain very positive and underweight hedge funds may use the dip as a buying opportunity. However, please remember that I am not a financial advisor and this is not financial advice. Everything I have stated is my own opinion and is provided for entertainment purposes only. Thank you for staying to the end and watching my video. If you enjoyed the video or found it informative, please leave a like. This is my first ever YouTube video and to be honest, I don't know if anyone will ever watch it. If anyone sees this who isn't my friends or family, I will be amazed. Please do leave a comment letting me know what you think, how I did, what you didn't like, anything at all. I will of course reply to every single one. Thank you very much for watching and have a good day.